morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the founder and CEO of Shares, Ben Chemla. Great to have you with us.
Thank you for having me, Elliott.
So before we get cracking, we are going to learn a little bit more about Shares. So, Ben, I guess the name is a bit of a giveaway in that you are indeed an investment platform in shares or stocks and other things as well. But it's not a typical one. What's the difference between you and an ordinary quote unquote investment platform?
So we started Shares about 2.5 years ago. I was just coming back from the US, and there I really realized how investing was part of the culture. I was back in Europe, and I realized that something was missing. Not only a platform allowing people to invest, but allowing them to invest in a very simple way, affordable way. And one big point that attract my attention was the lack of financial education. So long story short, Shares is a platform allowing people to invest in a wide range of assets, stocks, ETF, and cryptocurrencies. But a component that is differentiating us from other platforms is that there is also a social layer. So you can basically chat with other users. You can see your contact portfolios and moves in real time. And you can also follow some more experienced and advanced investors and learn through their own portfolio management, right? So that is the component that was missing. So simple, affordable, but also educational.
And is it a bit like, it springs to mind a bit like a eToro in terms of the social aspect? Can you mimic somebody else's investing as well? Is that a way for people to kind of get into these things?
Yeah, so we do not allow people to actually mimic other people's strategies. We thought that this is an interesting feature that can be added, but to us a little bit dangerous. We really want people to to own their decision, to make their own decision and moves. Also, when you are mirroring someone's portfolio, you eventually could be doing it at the wrong time, in the wrong period, because there are moments for everything. So we're more about letting you basically keep track of people's moves and get alerts and engage in some conversations, but make your own decisions. One thing that also is interesting is that on Shares, you can invest as little as €1. So we provide people with fractional shares. You can invest in €1 in LVMH stocks, which are currently worth more than €650. So it allows you to have a more diversified portfolio, even if you don't have necessarily a lot of money to invest. So that is something that really we was important for us.
And get a slice perhaps of Berkshire Hathaway as well, whose shares trade considerably more. Can you give us an indication? You said you're 2.5 years old. Can you give us a sense of numbers, users, growth, fundraisings, markets that you're already in, and perhaps a path to profitability?
Yeah, absolutely. So we launched first with UK markets about 1 year and a half ago. We launched then Europe about 9 months ago. We have raised 3 rounds for a total of 90 million. We are backed by mainly Valar Venture, which is an amazing founder located in New York. Peter Thiel's fund. They are responsible for many great successes in Europe, such as N26 or TransferWise or Conto in France. We also are backed by Singular, which is a great also French VC. We have about 110 employees across 3 main offices, so Paris, Krakow in Poland, and London, where my co-founder and CPO is. We have on board, since we started, about 150K users accounts. About 50K accounts have been created over the last 9 months just in France, which is our main now country. We do not yet communicate on revenue. We're pretty young as a company, but it's growing quite fast. And last, we have also an activity which we have not communicated on much, which is a B2B activity. So obviously we have built this whole very complex platform. We are now regulated as an investment firm and a custodian. We offer a wide range of assets. We have all the wrappers, and we've been contacted by many big firms, banks, insurers, and so lately we have engaged in several conversations to provide these people with white label version of our platform, and there it's a SaaS model. And so we intend to break even in the next year and a half in a combination of our SaaS model and our B2C model.
You mentioned that you started out in the UK and your co-founder is also there, but in August of this year, you, I think, announced the closure of your business in the UK for investors. At the very least, you're still keeping your operations there. What's behind that move? Was it just to kind of, move fast and break things? You saw that UK wasn't working. Okay, let's move on and focus elsewhere.
The UK has been an amazing lab for us. Our co-founder and CPO formerly worked at Revolut, where he was in charge of the trading platform. So he had an amazing knowledge about the UK markets. And in fact, the thing is, we got regulated in Europe. Our regulation is very important for us. We are been passporting our authorization across 27 countries, while in the UK, we actually have been operating under the appointed representative model, which is a tied agent system. So there we had way less flexibility. Our investment universe was much more narrow, and we were not offering all the wrappers that, to me, are required if you want to properly address the UK market, such as ISA account, for instance, to begin with. So I think our offering was very interesting because of the social layers, but we could not really expect people to significantly invest larger amounts on shares because we were lacking all these things that eventually we could have offered with the proper license. So the UK was, to me, like a very good starting point. We haven't bought many customers, but they had like low asset under custody on the platform. After only a few weeks, France had already more assets under custody with way less accounts open. So it was much more interesting. And also all the B2B development that we've been involved in over the last 12 months, 18 months, are mainly Europe focused. So we thought that we would do that first. And now we know very well the UK market will get back there with the proper license when it's the right time.
Right, of course. You wouldn't be the first fintech that leaves the market and then goes back. Monzo, for example, moving back into the United States after having to pull out after their first attempt. Just very finally about shares itself, Ben. Unless I'm mistaken, that you've got the Williams sisters promoting you. You're a big fan?
I'm a huge fan. I grew up as a tennis fan. The funny story is my dad worked for 3 years at Roland Garros as an informatician. He was a developer, and I was one of these young kids who's running around trying to get these celebrity signatures. And yeah, I mean, obviously they are amazing. And back when I started shares, I really wanted to try to find a way to meet with them, and I did, right? And they liked the ambition. They were amazed by the vision. They are really about democratization of finance, and yeah, I mean, it was a fit. And not only we met, but they became our faces for this great campaign that we launched from Vivatech last year. I brought them both to Paris on stage alongside me. It was like a dream, and we had this big scene in front of 5K people, and that was the best way to kick off a campaign for shares.
Okay. All right. So look, we've heard about shares. Let's now learn more about Ben. So Ben, shares isn't your first rodeo. I think you've had a number of startups. When did you know entrepreneurship was the path for you?
I felt like I always knew. I was a very turbulent kid, always trying to do things, build a project. I was supposed to become a French lawyer. I studied law at the Sorbonne University, but even there I was running association. I was in charge of the debate associations. So it was something that was my DNA quite early on. I started my first company while I was in the Paris bar school. So I was 21 and a half, 22 something. So I never really worked for anybody or any kind of company. I started my company straight off the gate from the university. So yeah, I think it's something you have it or you don't, but in my case, it was from day one.
And some of your previous startups succeeded. I think at least one in particular, such as FitHouse, I think it was called, failed. Does it help? Is it better to have a failure under your belt or a success under your belt to have bigger success later on?
You never learn from successes. You can only, you actually, from successes, what you learn Is that how to build a network, and you can make a name for yourself, and people like answer the phone when you call and you try to reach them. But you don't really learn from successes. You can only get more stupid, But from failure, you learn a lot. It has to hurt you, as long as you are smart enough to understand what happened and why eventually you failed. But yeah, I did a company named Stuart in the last mile logistics space. Was interesting, which I scaled in several countries, in the UK as well. We sold it to the French Post, which is the parent company of DPD. That company was a pretty interesting run for 2 years and a half. And then I moved to the US, where I launched FeedHouse, which eventually I failed 3 years later. Some might say that it was because of COVID. For sure, COVID didn't help. But end of the day, a failure is a failure, no excuse. And I learned a lot from this one, seriously, like on every aspect, and especially how to bounce back. And a few months later, I started shares, and here I am today. So life is long, life is not short, as long as you are, you see it this way.
And I suppose in your spare time, you're also quite adept at literally getting up after literally being knocked down, because you're quite into martial arts and other things. Is that your main passion outside the business?
Yeah, I think like you need something to balance work life, because we all work very hard. We're all very heavily invested in our companies and developments. And so in my case, lately it's been really like martial arts, something that really balance family and work life, and keep my energy quite high. So yeah, that's true. That's something that I do quite often.
Okay, so long as you don't kind of have the black eye when you walk into the VC's office or anything else like that. So look, Ben, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Share's co-founder and CEO, Ben Chemla. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Ben, let's talk about the future of finance. So, Ben, financial markets have become a little bit volatile as we've moved through 2024. For investment banks, for trading houses, that's usually good news because there's more trading and so more revenues. Does the same apply to investment apps focused on retail investors, such as Shares?
Yeah, volatility is always something that creates a lot of movements. Investing, trading platform are, at least for some part, like their revenue are based on transactions. So it's something that is good. So you see like transaction volume moving up for sure. So that is something good. But I think right now it's a little bit crazy. Like some stocks are looking like cryptos. When you look at their volatility, you see them like doing ups and downs, like within the same day, like plus 10%, minus 10%. So that's quite crazy. But yeah, that's something that is interesting. But more important, it brings more and a new investor, new retail investor in our platforms, because it creates the interest.
And of course, much of the excitement over the past 12 months or so has been on the impact of artificial intelligence, or at least the potential impact. How do you see this affecting investing, investment-focused fintechs, and the way that people go about investing? If AI can choose all the winners and you don't have to do anything other than press a button, then maybe that's a good thing, or maybe they won't need to learn about investing and they'll be able to blame everything on the algorithm when things go pear-shaped.
I think AI definitely is a tool that forever will impact and change the way people invest and the way people see portfolio management, and that for sure. However, lately on my hand, I've been heavily involved with the financial advisor space. I think all these startups, and I'm one of them, we kind of have made our initial DNA on the idea that self-care is the way to go. Like people will just learn how to do things themselves. But in truth, you have to understand deeper, every single investor situation. Do they have kids? Do they have loans? What is their situation, right? And so I believe that the financial advisor space is also very interesting. It's a growing one. I think the total amount of money under management is increasing by about 20% year over year in Europe. So lately we've been working closely with some financial advisor firms as well to see how technology can help them in their journey and make their customer life even sweeter and easier. So I think there are different ways to go about it, and AI to me is still a tool and not a whole. You still need some people behind the computers.
But of course, AI can also be used for nefarious purposes, and there are concerns it'll prove a boon to fraudsters using it for things like deep fakes. On balance, will AI, artificial intelligence, make fraud worse? Will it reduce it, or will the impact be broadly neutral as the kind of in that the good and the bad will, cancel each other out?
Lately, for us, it's been more like a tool that has reduced actually the amount of issues rather than increasing them. We are for sure have been looking at using AI in fraud detection, money laundering, and different aspects of our business. So definitely AI, to me, I see is something that in that extent will be a tool and will be very helpful. And we see more and more companies that are using AI, including AI in their support. We do not at the moment have included AI on our support, but for sure it can also be something that we will closely keep an eye on.
And moving tack a little bit, ESG, environmental, social governance issues, I mean, they've become a bit of a dirty word in some investment circles, certainly in the United States. And yet among fintechs with their younger user bases, do we still see a desire to make finance more sustainable in terms of the environment and its impact on society? Is the industry doing enough, do you feel? Is it where it should be, or is there still a long way to go?
No, I think we're going on the right direction. I think big firms are now including that in their strategies. We see more and more retail investors actually seeking for ESG portfolio, ESG products. This is something that is now a must-have. So I think we're really going on the right direction from all aspects. As a platform of good, obviously we need to provide people with all the different kind of investment and let them make the decision. But for sure we are pushing ESG products, and it's been working quite well for us so far.
And you're based in Paris right now. We're having this conversation. I'm in London. You're in Paris. As we mentioned earlier, you recently closed your UK operations. Is this further evidence? I mean, I know you have your own personal reasons or specific reasons to shares, but could one read into this further evidence that France is gaining ground, or Paris is gaining ground on London as a global financial center?
No, I don't think so. I think we have from our inception always kept two main offices, one in Paris, one in London. Paris was always on the map. We have just happened to be regulated here, fully regulated license as an investment firm, which we have passport across 27 countries. So that is something that for sure is a side impact of the Brexit, and it's unfortunate. However, there is another one, which is that the French market and the European market is way less mature than the UK market when it comes to investing. There are many already existing platforms in the UK, and they are doing a pretty decent job, to be frank. And I think where we can really differentiate from our competition is in Europe, because we can offer so much more. So we know well here we have a clear understanding of their needs. So yeah, the market is much more mature for us.
I suppose it's also easier to move across markets within the European Union as opposed to different regulatory regimes, between the UK and the EU. But I mean, if we just take a step back for a second, I mean, if you were going to start a fintech today, where would be the best place to do so? London or Paris?
I would say that for sure, if you want to start a consumer fintech, London stays like number one place in Europe. There are like so many talented people there. The market is an amazing lab because the adoption is much quicker. So for sure, I mean, if you think about it, right, you have like Revolut, you have Monzo, you have Free Trade, you have so many like successful consumer fintechs. While in Paris, there's way less. There are like a very interesting one like Lydia. There are like, but most fintech successful in Paris you will find are like more B2B focused. So it's just different. Now, if you want to start a B2B company, there is no need for you to be either in Paris or London. You can be anywhere and just walk around, cities. So I think, that's my 2 cents. And the main reason why we built this team in London is because we had all these talented people that we brought on early in the process.
Okay. So I think both London and Paris can be satisfied with that answer. So look, it's time now for our round of rapid fire questions, Ben. Are you ready?
Let's go.
Okay, so I'm going to put 90 seconds. That's why I've been fiddling with my phone here. I've got put 90 seconds on my timer, and we will try and get through as many as we can. Just one word answers is all I'm looking for. So away we go. What fintech segment, in your view, has the biggest potential over the next 5 years?
Financial advisor.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
24 hours only per day.
Are bank bosses ready for the AI revolution?
Absolutely not.
Are customers ready?
I don't think so yet.
Do you think that regulators in the EU and the US have kept pace with all the new behaviors and possibilities we're seeing in the financial industry?
Definitely not.
Have you personally ever invested in crypto?
Of course.
Are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
No.
On a scale of 1 to 10, 10 being the most likely, 1 the least likely, how do you rate the chances of the following things happening in the next 10 years? That one of the neobanks will be as profitable as a top-tier legacy bank?
7.
CBDC, central bank digital currencies, will become a mainstream reality in Europe or the US?
8.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool used for transferring money around the world?
4.
That a new rival will emerge to challenge Visa and MasterCard?
10.
And that we'll see a top-tier bank or insurer bought by a fintech?
10.
Okay, well, I'm also going to give you 10 out of 10, Ben, because you're one of the few that has answered all the questions so quickly that we managed to get through all of them. But that sadly is the end of our rapid fire round of questions and our conversation. So I really want to thank you again, Shares co-founder and CEO Ben Chemla, for joining me today. Thanks so much.
Thank you very much.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.